Good morning, everybody. It's Christian from Sin Education with the 4 Major Notes update for the 7th of February 2013. Morning, guys. Hope you had a fantastic trading day yesterday. Let's crack on and see what's happened and what we have today. Okay, first things foremost, look at the news, and boy, do we have a lot. If you check any of your fundamentals, you will notice that there's a hell of a lot of news out today. For most, the European Union, sterling, CAD, the USA, and there's a hell of a lot of news. So if you are new to trading, it's far better to stand aside today because there's a lot of factors out there that could actually move price today overall. Ones to look for is we have the first day, day one of the EU Economic Summit. We have today, we also have trade balance figures. We also have the Governor Designated Carney speaking. Most importantly, this afternoon, GMT noon, we have the official bank's interest rates for sterling, and we have the interest rates announcements for the European market. And then this evening we go into, well, this afternoon we go into unemployment claims for the US market. So I have a lot of loads and loads of news. So far better to stand aside and just get an idea, or look at the pairs and see where they're trading, to give an idea of if they're trading at major support and resistance levels, to see if any of this over here, the outcome of any of this, what happens today in this news, will actually factor going forward on particular price finding support and resistance levels. So if you look at the weekly here on the euro, you can see quite clearly that we had a start, we have been negative all week, and near term we've had a bounce, and that bounce is pretty much keeping us above this institution moving average, and I've gone for that round number here in the shape of the 13,500 mark. And on the daily, you can quite clearly see how price has pulled back over the past couple of days, and we are now sitting, and you notice the last 3 days we've found support now above this area. It's still forming lower swings. Yesterday's candle forming a lower swing, but it still remains above that 13,500. So we are at a major support area here, and if any of the news comes out today negative, then we could see potential for euro to break that. If you get a break of that, then we should be looking to these target areas below. These target areas over here are the levels I've taken from my Fib projection that I took from the all-time low here in July on my weekly. So the projected from the July low all the way to the September high back towards this November low, and it's projected 100%, a fib of 100% of the initial move. And you can see price has been moving up to that way. So now I can use that as a yardstick, as potential target stick. As long as the 13,500 is not being broken, then we should see price potentially move up towards that 100% mark. If it fails at that level, then I could use the fib retracements on this projection as targets. So that's what I've done over here, and I've got them noted quite nicely in my daily. So 13,500 would be my first target if price had to fail here at 13,500. Second target back towards the 13,200 mark, and then third and fourth, etc. to the downside. So I have a yardstick. So now I'm just going to be patient. My 4 hour, you can quite clearly see near term there is lower highs. We had an all-time high at 13,700, and the previous high failed here. So you can see I got a lower swing, and that's moving price downwards. But you can see on my 4 hour chart, my histogram on the other side is still remaining blue, so it's telling me I should still be potentially looking out for further upside movement. And most importantly, my institution moving average is still below price. On my hourly, however, we are seeing something totally different. On my hourly, you can quite clearly see a couple of weeks back, we saw consolidation here occurring, and still above the institution moving average. Bar a couple of days over here where we had price moving sideways just below it. It failed to really move any lower, and subsequently still trading above the institution. Near term, you can quite clearly see we are spending a bit of time below the institution moving average. However, we are still above that 13,500. So the only thing in the way now is this 13,500 mark. You can see if I take my highs to it and draw a trend line, intermediate trend line, you can quite clearly see we have a lower swing here. So anything, if we see any action, it would be in this area around here. We would either have to see price actually finding support. A nice bullish engulfing candle would confirm that. Ideally, a break above that 13,600, which happens to be the price swing, would be even better. So if price can get above that, then happy days. We should be looking for the target, the upside towards those 13,700 mark. If not, we see a break of 13,500, then we should be targeting to the downside. we've got a bit of near-term movement around here if you wanted to, but ultimately we should be looking for at least to 13,3500 would be our next potential target overall. So that'll be our major target 1. Target 2 will be way down here at 13,200 and so on. So be aware of that, guys. We could be seeing a change in market sentiment today. Let's have a look and see what the news presents, and that could potentially set us up for tomorrow going into the new week. On to sterling. These lines I've drawn on all these charts on my 4 majors are ones that I spoke about yesterday, and I've actually plotted them all on here. So it gives me a guide line that's what I tend to do. I tend to look at the markets, the pairs for the week, and then I plot my lines on, and then I leave them on for the remainder of the week. And I use them as yardsticks and stuff like that, targets, etc. So that's what I've done exactly here. You can see that I have lines, horizontal lines on here already plotted, especially on the weekly. It gives me a gauge as to where price has been, where it's come unstuck, and the major points of contact on here. I can gauge straight away that on my weekly chart we've had a failure here at the 16,300 mark. Noticeably, a lot of candlesticks here have actually depicted exhaustion to the upside, and prices doing so fallen to the downside. Near term, we're trading below the institution moving average, and you can see this week we're starting to see the first histogram giving us a negative sentiment. But you can see the next target, as long as price remains below the institutional and below the 15,900 mark, which happen to be price support, you can see that we had a lot of contact down here at 15,300. Below 15,300, we've got another fall to roughly around the 14,900 mark. However, back down towards these levels here at 14,2,500 would be our next target. So lots of air down the bottom here. There's not much over here to actually stop it from falling. So very, very important level here at 15,300 for sterling. In the past, you can see through 2011, 2012, the end of 2012, we had support. So very, very unique or very important area, that 15,300. So on our daily now, we can actually gauge that as our next target, our long-term target. And you can see on our daily, beforehand, we were trading above the institution moving average through August of last year, right through until mid-January. Since then, we've seen price breaking through that institution moving average and testing the price support area here. And doing so, breaking below it, pulling back, and now the continuation lower. We had a nice bearish engulfing candle on Friday, and now you can see prices really falling lower. The most important thing is our CTC template is in our favor now. We have lower swings, which depicts downside. Okay, your highs are getting lower, which means that price is moving in a trend to the downside. All our moving averages above price, and most importantly, our histogram on either side and our institution are above price. So everything at the moment now is looking negative. You can see near term though, price a couple of days ago broke lower than this intermediate support area here, just above the 15,700, and in doing so now broken a major support. Near term, are we going to see resistance? So it'll be interesting to see if that news out today would reflect negatively on sterling, and if it does, then we should be looking for price to actually fall to the downside. I'll use my 4-hour chart now to confirm that. So there we go. You can see I put my 15,700 as my major support area now. I've made a note of that. As long as price trades below 15,700, I should be looking for nothing more than shorting opportunities. All my moving averages are above price, so that's a negative outlook. Look at the histogram on the CTC, very much red. That's also another negative outlook. And because we're trading below a major support, you can see price support previously, and that's been broken. Now it's confirming that this is no longer a support area. This is more likely to be a resistance. We want a confirmation of that. We want to see a very bearish candle. A bearish candle, okay, telling us the intent where price is likely to go to, because you can quite clearly see near term here on my 4-hour, a lot of indecisive candles. Okay, we don't trade indecision, we trade decision. So I'm looking for a nice bearish engulfing candle to confirm this is now resistance, and we should be targeting to the downside. Moving on to the US dollar Swiss franc, let's have a look at the weekly. Here you can see our intention on the candle near term. You can see it's very indecisive, a lot of wick on either side, and a small trading range in the middle. So very indecisive for this particular pair. But you'll notice that price, I'll take an all-time low here in August of 2011 to the current high, which happens to be here at August, September of last year. And I've drawn a fib retracement of that. And you can see that the 23.6, the 38.2, 50, 61, 78 are all in play. And you can see quite clearly through September, October, November, December of last year, price actually found support at this level, at the 23.6 fib retracement. Then we had this bearish engulfing candle here in December, mid-December, and price actually then fell away and remained below the 23.6. And as long as it maintains below the 23.6, then my next target would be here roughly around the 88.50 mark, which happens to be here at the 38.2 mark on the Fibonacci retracement. Histogram is very much negative. Most importantly, the institution is trading above price. All the moving averages on a weekly are above price, which is a negative sentiment. So I take that and I plot that all on my daily. You can see that dark black line there is that 23.6 mark. And sorry, the 930 is the 23.6 mark. So this near term one over here is the consolidation that we've seen on the daily. So very important. You can see that that's the 23.6, and as long as that's above price, then we should be targeting the next one, which is 38.2, which is down the bottom here as the next target. Near term, though, you can see that we've had consolidation now. Okay, it's imperative that we actually get below this consolidation, the support, and you can see that we've had a lot of indecision candles in around this area, price support, and you can see a lot of hesitation now on my daily prior to that. So it's imperative, if this is still to remain negative, then we want to see a bearish engulfing candle confirming that sentiment is still truly with price to the downside. Histogram still remains predominantly red. There is one or two areas of blue. However, you'll be trading against the major trend, and therefore there'll be no trade. So as it stands at the moment now, look to see if we get a nice bearish engulfing candle on our daily or 4 hour to get us below this consolidation area here, and then we should be targeting those downsides to those targets I mentioned in the shape of, in this case, our next target, because of the 23, we go down to the 38, which is our Fibonacci retracement area on our weekly, down towards those areas here around about the 88.50 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at this weekly chart. You can see quite clearly I have my major support and resistance levels plotted on my weekly, which are the ones that are gauging long-term support and resistance levels. And you can quite clearly see that at 9400 we have a major support and resistance level. Excuse me, these are fib retracement areas from the all-time major highs that we saw back on our monthly chart. You can see we had a major extension to the downside here, the high on this particular trend, and now you can see prices pulling back. So I've taken these levels over here, and you can see the 23.6, the 38 is now in play, which is on my weekly right here. That's the 23.6 back at 87. The next one is in the 9400 here, and oops, I can just put it here so you can see. So you can see where price has actually physically touched it, and now it's imperative that we get above that to see further extensions to the upside, or to see further extensions for this particular pair towards at least towards a 50% and 61.8 to the upside. However, so on our daily, we need to plot those lines in, which I've done. So I've got my 38.2 area here at 9400, the 23.6 below me, and now that we're at this, you can see yesterday, the day before, and see on the Tuesday price buying, and then yesterday or Wednesday a lot of hesitation, forming an indecision candle in the shape of a doji. So doji we don't trade, we trade decision. So we have a doji at a major resistance level. So if we get a bearish engulfing candle here, it could be telling us that we could potentially be seeing an evening star, which is a reversal candle, and then that would potentially tell us we should be looking to the downside or consolidation to the downside. So we'd have to take that on board. So look at your support and resistance levels intraday if you want to. You can go to a 4 hour for argument's sake and plot your support and resistance levels on this time frame. Quite clearly see that there's a consolidated range just above the 9300. Nice little support here at 92. Further support and resistance here at 91. So all around these round numbers on the intraday time frames are particular targets for this particular pair. So hesitation. So you can plot these in and use them as potential targets for your intraday trading. So make a note of that, put them all in, and just wait patiently. You can see on the hourly here quite clearly, on this particular chart, my hourly, you can see very much blue on either side, so a very strong upside trend, higher swings depicting upside motion, so swing high, swing high, swing highs. Trend is definitely to the upside. However, the 9400 now is a major sticking point, because that is a 38.2 fib retracement on our weekly chart, and that's a very strong resistance. So anybody who's been trading from 23% up towards the 38 will look at it as a target area, and once they get to the target, they would start dumping their, or they'll be maximizing their profits, so selling their contracts, and all those contracts will be put back out into the market. So we could see a consolidation taking place under here. Depending on how far back it pulls, depends how strong the actual move is in this. The momentum is still with this particular pair. You can see price pulling back, and now we've gone into some sort of consolidative range price is not making lower lows and not making any higher highs. So over here, you could look for a breakout. Just be aware of this trend. But look at towards the 9300 as a particular target over here. Quite an aggressive entry. Quite an aggressive target. There's a lot of noise over here. It'd be far better to get below all that and then look to the next target, which would be roughly down here at the 9200 mark, which also happens to be our institution moving average on our daily. So a nice little consolidation range here, and there'll be a lot more profit to gain from here than to gain from there. Okay, so I hope that's made sense to you guys. Otherwise, very, very important. There's a lot of news out today, guys. So the fundamentals, we're heavy with the fundamentals today. There's a lot of important news. Interest rates announcements for both the European market as well as sterling. And then we have a number of key speakers speaking. But we also have that EU Economic Summit, day one, happening today. So there's a hell of a lot of news out there. So it'd be far better just to stand aside and be patient, because a lot of the majors are trading at major support and resistance levels. And I think a lot of this news will actually go into giving us an idea what's likely to occur if we get nice bearish and bullish breakouts. That'll give us an idea of potential trade setups for the following week. So just be patient, guys. Okay, that's it for me today. Hope you have a fantastic trading day. If you are using these templates, guys, please back them up. Follow the rules, very, very important. And once you've done that and you're getting all your systems are A-OK to trade, then back it up with sound money management rules. Okay. Otherwise, have a fantastic day, and I'll see you tomorrow morning. Until then, trade serenely.